All right, so today I wanted to make a video on is the market overvalued, and if so, how much, and what I'm planning to do. First things first, if you get value out of this video, please like and subscribe. Getting right into it. So first thing I'm going to talk about here is the FactSet report. This is a report they put out, I believe it's every month. And they put out a lot of good information. And I think these two charts here are probably the most valuable. The first one here is the forward 12-month EPS versus the 10-year moving average, essentially. And what you can see here is we are currently above that by close to a record amount. We probably were higher back in 2021, but given the recent pullback, it's a little bit more valuable, but for lack of a better way of putting it. And if we kind of zoom in here, we're currently right around probably just over 300, and it looks like that moving average is at about 265 roughly. That would imply that we are about 15% overvalued roughly right now. If we look at the average PE compared to the average, this is, again, going back 10 years, and you have the 5-year average and the 10-year average. 5-year average is a little over 19. The 10-year average is at about 18. And as you can see, we're currently between 20 and 21. So also would imply that we're a little bit more than 10% overvalued where we're at right now. If we look at the sectors here, this is broken down by sector. If we look at the individual sectors, the one that's definitely the most overvalued is tech. The 10-year average just below 21. It's currently at about 29. Consumer discretionary is a tad above its 10-year average. Industrials is above it by a decent amount. The S&P is exactly 21, according to this. Consumer staples also above their historical averages. Materials is above it. Healthcare is above it. Communication services is above it. Real estate apparently doesn't have a 10-year average, but according to the 5-year, it's actually a little bit below. Utilities is right on. Financials is a little bit above, and energy is actually a little bit below. And that's most likely because I think people are expecting some economic weakness going forward. So based on this chart, there is really no obvious value, at least at a sector level. This report does not break it down by large cap, small cap, and mid cap, at least from what I read. I mainly looked for this. But from what I've seen, based on other data, the mid caps and the small caps especially, there definitely is some value there. So if we look at these charts, again, we're definitely overvalued. So what am I doing? Again, just my personal opinion here. I could be wrong about everything. We could have a massive crash and no real returns for the S&P over the next decade. That obviously could happen. It's happened before. In my opinion, if you're a long-term investor, if you're a short to medium-term investor, you definitely want to be conservative. I think that that's pretty much undeniable. If you're a long-term investor, i.e. you're more than 10 years away from retirement, I don't think you change that much. I think you just change a little bit. I think that you need to be cautious, certainly, on the companies you're buying and what their valuations are. Now, I've said time and time again that there's not much that I'm personally doing that's different, because when you're index investing, you need to be really concerned about this stuff. If you're buying individual companies, it really does not matter how expensive the market is. What matters is how expensive the individual companies are. And I'm someone that has probably 80%, maybe even a little bit more percent of my stock investments in individual companies. So how expensive the market is frankly, it's not irrelevant as a whole, because if the market comes down, your average company that's undervalued in an expensive market, on average, it's going to come down as well. So I'm not saying that it's not relevant, but when you're looking at individual stocks, what matters is the individual stocks. So that's why I'm saying that if you're an individual stock investor, your main concern is not how expensive the market is, it's how expensive the individual companies are. So I've said time and time again that there's really two things you got to look out for. Number one, are you investing in good companies? And number two, is it a good price? So that's really all you need to know when it comes to stock investing. Obviously, there's a lot that goes into that. It's obviously a lot harder said than done, but that's the gist of it. When it comes to index investing, if you're an index investor, I would not be buying the SPYs right now. I would not be buying the VOOs. I would not be buying the any market cap weighted fund. I would not be buying right now. The only ones that I would be buying right now, and there's nothing that I think is really good value right now. So let me be clear about that. What I would be buying though is the equal weight indexes like the RSP, which is at an all-time high, but it is still a more reasonable valuation than your SPYs or VOOs of the world. Also, the mid-cap funds and the small-cap funds, specifically the value side of the market, right? If you're looking at the growth versus value play right now, the value side of the market, there's definitely more value on the value side of the market. Growth definitely is overvalued, especially the large-cap stuff. So that's what I'm doing there, but personally, again, this is the personal mock portfolio. I haven't bought anything new I did buy Louis Vuitton and EVVTY. I think that was about a month ago, roughly. Both of those positions are actually up a little bit since I last bought them, or since I bought them. Other than that, there's absolutely nothing that I've bought. The only thing that I have done is I have sold a little bit more of SPHY and USHY because those funds are also basically at yearly highs. They've gone up quite nicely, although you own those mainly because of the dividend or the distribution, not necessarily because of the price returns. And that's basically the gist of it. The key I'm doing right now is I'm just selling puts, waiting for them to get more reasonable valuations. That is all I'm doing, and while I do that, I'm just building on my cash position. That's basically all there is to it right now. I think the play is definitely leaning conservative right now. There are some areas of the market that I still think are undervalued. I think that there's some value in some of the financials right now. Like I've mentioned, some of these insurance companies, some of the banks are at a decent price. I'm not necessarily saying a screaming buy. Industrials, tech, definitely overvalued. If we look at real estate's come up a lot just recently. Like I mentioned earlier, some of the real estate plays. I was kind of loading up on Vici Properties back when it was like $28 a share. In here, I think I got up to like 500 or 600 shares. Actually, it was only 300. I must have sold those puts a little too high, but nonetheless, that is basically my plan going forward. If I break it down sector by sector, energy, I definitely think there's some value there right now. Like I brought up some energy companies recently. Financials, definitely some value there. Utilities, honestly, I have zero exposure to. That's something that, given how low growth it is, not necessarily a fan of that. The only real time where utilities have their value is when rates are very low. The higher rates are, the less value utilities typically have. Real estate, I think that there's a little bit of value there right now. Communication services, I don't know if I have any exposure to them. Healthcare is healthcare. I think that there's a lot of companies that are really overrated when it comes to healthcare, but I think there is definitely some hidden gems there. Materials, very hard to find the good materials companies because if we get a recession, they're going to get hit really hard. So that's one that you definitely want to be buying in a recession. Consumer staples also don't really have a lot of exposure to them. I think that they're clearly a little bit overvalued right now as well. Industrials, even though the forward PE of the sector is clearly above the average, I still think that there's a good amount of value in industrials. That's one of my favorite sectors. Consumer discretionary as well. I think there's a lot of overrated companies in consumer discretionary. Same goes for tech. A lot of companies that are just way overvalued, but there are some hidden gems. So that's basically my plan going forward, in that nothing significant is changing, and nothing significant should ever change, because you're always looking for value. The only thing that really changes is where the value is. And every so often there will be quite literally no value anywhere. We're close to that, I think, but I don't think we're quite there yet. So anyway, that is my plan. If you liked the video, like I mentioned earlier, please like, comment, subscribe, all that good stuff, and stay tuned for more.